Absa Bank have just released their half-year results. Quite impressive, and we have set up here to have the conversation with the MD and CEO, Abdi Mohamed. Now, quite some good numbers, billions made, shareholders happy. Are they still on track? That's the question. Welcome to the Trading Bell. Abdi Mohamed, welcome to the show.
Thank you.
It's good to have you again.
It's good to see you always.
Thank you so much as well. And first of all, I want to give you your flowers. This is commendable. Looking at the numbers, profit rising all the way, profit after tax by 9%. And my quick question would be this, because we have had these conversations. What's your feeling about the results, and are you on track to what you hope to achieve for the year?
Indeed, no, thank you. Thank you very much, Maina. We just announced our half-year results. We took our investors and the media through the financial performance of the bank, but also through the operating context in which we have achieved these results. We are happy with the direction of travel. We are happy with the profit growth. As I said out there, there's been also a significant amount of transmission of the reductions that we have seen in the CBR rate, which has translated into benefits for our customers, and that shows up in the revenue line. But when you look at the overall P&L of the company, 9% growth is strong. It's something we are happy about. We gave an update on key strategic executions around business banking, consumer, and corporate. And we've shown where we are on each of those areas. Quite happy about the cost and efficiency element, which has come in and really improved the profit after tax. But also some very good performance around impairment and credit losses, where we continue to see an improvement, year on year. So overall, good H1. Obviously, we remain focused to ensure that the results continue to improve in the second half of the year as well. And, that's what we have shared with the market this morning.
Great summary. Last time when we spoke, there were some words that you used. You said consistency was the watchword. And I wanted to ask you, looking at the three enablers that you spoke about, there was digitization, talent, or brand. What would you say has borne the best or the most ROI when it comes to, this strategy that you're looking at?
Yeah, and I think you pick a very, very important word to us. I mean, you have to go back years and look at the results of Absa. And what you will see is consistent growth, predictable growth, and a commitment to fulfill what we promise our stakeholders. And so generally you will see that it's above market average growth, and it is growth that is consistent and sustained over many, many years. And that continues to be one of the strengths of the organization. I think with regards to the enablers, again, we shared this morning, great progress on the digital agenda, where we're seeing new revenue streams. We gave the example of inward payments, inward remittances, which is a big part of Kenya's economy. And the bank, from just 1 year ago, kind of launched with a few partnerships with remittance companies out there, getting to 6% of the share and growing very fast. We showed increasing usage of digital channels by our customers. In the corporate bank, going into the 90% and above. In retail and business banking, in the 70, 80 kind of percent. And therefore, a lot more transactions being generated digitally. And this improves both efficiency and it improves customer experience as well. We are seeing on the brand side, the scores in the upper 90s, positive tonality, 98%, brand awareness, 97%. And we continue to track and see that the market is aware of Absa at very high levels, but also is responding positively to Absa. And as you know, it's a young brand in the market, just getting to the 5-year mark. And we are very pleased with the level of awareness and brand traction that we are able to show. And then, as we shared, the agenda around people and our colleagues in the bank, ensuring that we're investing correctly in training and other activities, good traction on diversity, especially gender diversity. We are now at a total bank level, 52% majority female. And at a leadership level, we're getting to 47% female, which is among the best, in the private and even public sector.
Excellent.
It's something that we are very, very pleased about, and we continue to drive that agenda as well. So that's what we were able to share, because the numbers are the numbers, they are outcomes. But the real stories are told around strategy and strategy execution, and how we remain faithful and committed to that journey.
Absolutely. And I love that. As you were talking and as you started talking, you painted a picture of the macroeconomic environment and some of the factors that have been affecting, your flow and work. But I was keen on the interest rates that have really had a sharp drop. And I wanted to hear from you. How has this really impacted you in general?
The drop is actually overall a positive thing for the economy.
Oh, okay.
It is something that both as an industry as well as the CBK, through the Monetary Policy Committee, have focused on for quite a while. You will recall that we came from a high rate environment 2 years ago. That was mainly driven by a need to control inflation, which at the time was quite high. Once inflation came back into the target range, and now it's kind of in the middle of the target range, it's in a very good space. There is now space for a more eased off monetary policy and monetary approach. And we saw right from Q3, Q4 last year, the CBR continue to come down. And one of the conversations, driven by the central bank that we've had in the industry is how to ensure that when those policy decisions are made, that they are transmitted and customers in the banking industry get that benefit. And today, as we were presenting, we were able to show internally within Absa how much our ABR, what we call the Absa base rate, has come down over that period of time, from highs of 17 to about 10, and ensuring that as we move through time, that benefit is going through to customers as well. Because of the timing on the average book, you will see that the benefit is about 4.5, but that's because of the timing and the quotas and how we implement it. But clearly across the industry, and certainly for Absa, we are seeing that transmission to customers. Now, this is very good because it has short-term revenue type impacts on the industry and so on. And we look at it as a reset kind of year, but we are also seeing that turnaround in lending to private sector. And from the main numbers, we are seeing some slight improvement coming in. We believe in Absa that that's the beginning of that upturn in private sector credit. And as we monitor the second half, that's something we continue, pushing. It's good for the overall economy as more credit goes into the sectors. It's good for our customers because investment cases become easier when credit is affordable and available. It's good for banks because you do higher volume business. You see lower impairment, which we have shown in this first half, that the impairment numbers come down. And that's generally the case. When credit becomes affordable, the risk of default in the overall economy also reduces. So we view it as a positive thing into the medium term and the long term of the country. Obviously, you will see short-term impact on banking revenues, and you've seen some of that come through in the first half.
I'm also a bit curious to know, looking at your strategy, your midway strategy now. Sometimes you may not predict that these are some of the rates that will be coming in. Have you had a review?
We, of course, do this every year. As time progresses, as the operating context, evolves, we constantly revisit our strategic agenda. And in fact, this week we are doing exactly that, looking at what has happened so far in 2025, and then planning for 2026 as well. I think the headline is it's largely going to remain consistent, but we have some flexibility, especially around areas of sector and where we focus on more, depending on how the macros continue to evolve. But the core strategy, the 3 key priority areas, the enablers that we continue to drive, has remained consistent over this period of time.
Excellent. Let's now move on to your Capitallight and non-traditional services. I could tell there are very positive remarks from it. And I wanted to ask you, since you highlighted that this Capitallight growth approach through the custody, bank assurance, and investment banking, how are you feeling about them, looking at your H1? And is this still the new goal? Last year we called it the new goal.
Yes, it is. And look, I think when we spoke, we were talking about bank assurance, which was really picking up then. We have Timiza, the digital lending proposition. We have the asset management in retail, where now, we're getting to about 30 billion of assets under management. And that's a business that is about 2 years old and growing very rapidly. And I think now 3rd in the rankings in Kenya. We also have launched custody business in the corporate bank. And that was actually this year, 2025. And it's gotten to about 50 billion of assets under management in our custody business, an area that is very critical for the overall corporate ecosystem. And it's a business in which we have a lot of previous experience. We did it many years ago, and we are back now. It's a business where we have a lot of support from the group as well, with Absa doing it in different parts of the continent. So when you put all of those together, bank assurance still powering on, and now getting into business banking and corporate in terms of providing insurance services for our business banking customers, and really unlocking a lot of new partnerships in that area. We see growth in those new businesses. Generally, actually, it's north of 20% on most of them. But of course, the bank itself is also growing. And therefore, the share of those businesses of the total bank is still in the 5-6% kind of range, and growing very, very sharply. And really, when you think about the NFI revenues of the future, that is where it's going to come from, and that's why we're really focusing and investing in those businesses. In bank assurance, we are rolling out new technology. In asset management, we are rolling out new technology. And so there's a lot of investment and interest from our board as well, very direct leadership from our board in terms of how we drive that agenda.
Let's now shift to your loan book and NPLs. And I listened to you keenly, but your loan book speaks a lot. Looking at H1 2025, it was relatively flat. And I wanted to ask you, do you see this as a cautious lending environment, or is it a reaction from customers that you've seen that? And also comment on the NPLs. I know you're still safe in terms of industry standards when you compare that, but I can see a slight increase in it. What would you say are the drivers behind this?
So if I can start with the lending book, I think that it's aligned to what we have seen generally in the industry. As I said, we are coming from a highly priced environment. It started showing that upturn from the month of May at a total industry level. And our expectation, as I said, is we see that continue into the second half and also into 2026. So when we look at the medium term, that should be an area where we see that turnaround and that improvement. And that's right across SME, corporate, and personal. With NPL, obviously, yes, it could be lower I do believe that it should be lower than what it is.
Okay.
But as you say, we are also still well below industry average, well below peers as well, in the tier one. But overall, I think as an industry, the push is to see how we continuously improve this picture. The pricing environment is one big improvement. And already in terms of new flows to default, we are seeing that improvement come in. Our impairment performance for H1 was the best we've had in a long time. Significant reduction from prior year, down 38%. And therefore, that portends some improvement. But as exists today, NPL remains a challenge for the industry, and it remains a challenge for the economy. And it's something that we need to continue, working on. And as I said when we were presenting earlier, for us the approach we always take is to see how we support customers through periods of stress. And in the first half of this year, we've helped restructure about 1.3 billion. And these are customers that are going through a period in which they require, support. And we have a specific team that deals with that requirement and helps them through the cycle. And hopefully over time that all reduces this NPL challenge that we have.
Absolutely. And maybe on the same breath, because I also noticed looking at the overall activities, there's been some bullish activity to the SME sector, really going to them and really assisting them with capital and the like. So I wanted to understand how your SME loan portfolio is doing, and not just start relative to corporate lending. What are you seeing so far since you've done under your strategy this bullish?
No, we are out there. It's a very, very important segment for the country. A big contributor to GDP. A big contributor to employment, especially employment of the youth. Most new jobs being created are created by small and medium enterprises. And it's not just in Kenya, it's across the world.
Absolutely.
And therefore, as a large and important bank in the market, it's an area that we focused on. It's increasingly become significant and getting to about a third of the total portfolio. Performance-wise, in terms of NPL performance and generally credit losses, it's improved quite a bit. And we are seeing continuous improvement in that portfolio as we improve, number one, the policy from our end in terms of the underwriting approach and the kind of risk we take in that market, but also improving capability. In Absa, we spend a lot of time building capacity in that market through training, through providing skills, especially financial skills, and helping those customers with the tools they need to ensure that their businesses become sustainable. Because at the end of the day, it's not just about pushing unsecured credit into the market and then experiencing the losses. It's about a very precision in the approach and how we approach the market.
Just Abdi on the sidelines, I would be curious to know from your end, because the government has a product it gives to one ING. Of course, you are part of the sector that is helping one ING as well in their businesses and the likes. What would you place Kenya as? Would you say we are on the right track in terms of enabling, or are we given too much? What would be your overall sentiment?
Of course, it's an important area that gets measured, and it's an area that interests the government, interests the regulator. It's about financial inclusion, getting small businesses into the banking sector to allow them to get the services and the solutions. So, in a way, Kenya is first of all a leader in this area through fintech innovation. Through some of the work the banking sector has done, through some of the work the telcos have done, for example, M-Pesa, and the many initiatives that are around that, and other telco companies that are in the country. So because of the high digital penetration, in Kenya you see that financial inclusion as a score is getting better into the 80s. But we continue to have discussions and conversations with our partners. And recently there was a meeting around the banking sector and Safaricom to look at what more we can do, how we can improve financial inclusion across the board. So the journey continues, but when you look at all the solutions, right, and it's serving different purposes. When you look at what the government of Kenya is doing, what the telecom companies are doing, what the banks are doing, it's all coming in at different levels and addressing different populations. And in each of these, there is always lessons that you pick up where you say, this is what we have done in this cycle. How has it worked? And how do we make it better in the next cycle?
Wow.
So those conversations do continue.
Okay. So as we come to a close, I think I would like you to make a comment on the some of the areas on the non-funded income. I think you've already mentioned on the custody and asset management, but FX trading was interesting. And the reason why I call it interesting is because we have had a very stable shilling for the last year now, and going, and positive sentiments on the sides. Of course, there are people who are saying, well, the volatilities were helping them as well make a shilling or so. But you still recorded some positives on the FX trading. I was wondering how you cracked this.
Well, at the end of the day, you look at the market and it's about helping clients work through whatever the scenario that exists. And with FX, what we have seen is that the shilling stability, which is a good macro event. It's good for the shilling to be stable. It's good for importers. It's good for exporters. And there is a predictability around planning. And really, a volatile currency is never a good thing for the overall economy. But as we see that stability, obviously banking margins have been lower, and therefore it's about volume play, and it's about innovation and doing more. And in the FX space, our volumes have gone up sharply, partly because of this inward payments proposition, partly because of this personalized FX, which is an app that we're using, and also because of just focusing more in the small business and in the retail sector. Additionally, we have been innovating around new products, risk management products. We've partnered with the Nairobi Stock Exchange. You are there in one of the events where we launched quite a number of new initiatives with them as well. And ensuring that the bank is playing in new spaces and getting new income streams while we continue to improve the volumes on FX, the traditional spot FX that we all do.
Finally, let's talk to shareholders. I know you have some good news for them. I would like you to speak to them, what you decided to give on the dividend payouts, and also looking at your share price. Last year was extremely great. Are we still on track this year to see probably another double? Please.
The share price is always an outcome of everything that we are doing. The level of execution that we continue to do in the market, the profit growth that we continue to show, and the consistent communication really with investors and stakeholders does positively impact the share price. We've had a good run in the market. Today we announced interim dividend of 0.2, which has been consistent with last year. But if you look at our total dividend payout for full year, which is the more important number, we have shown that number growing at double digit since 2021. And so that trend has been quite positive, has been quite good. And the job we have facing us now, as we get into the second half, is to ensure that we deliver on the financial commitments that we have made, so that we continue providing our shareholders with adequate return. So that's what we continue working on.
So the word is consistency.
Indeed.
Thank you so much, Abdi, for your time.
Asante sana.
And well
always
done
a pleasure.
Excellent.
Always good to see you.
Wow, thank you so much.
Thank
That's
you.
Absa Kenya H1, just analysis with the Chief Executive and MD, Abdi Mohamed, and he says consistency. So shareholders there, We got a smile. Thank you so much for your time. I'll leave you now with the markets.